Okay, so I understand that you have some breaking news that you want to share with everybody. We might be the first, I don't know, to hear about this. But yeah, would you please share your breaking news?
Yeah, listen, I'm really proud of the work the team has done to grow Dolly Varden. Um, we started at a small valuation, and through discoveries and through acquisitions and through financings, the company's grown. And to touch on that point about dilution.
Welcome back to Metals and Miners. I'm your host, Gary Bohm. Today we're digging into silver. It's the ultimate beneficiary that's in the crosshairs between two revolutions, monetary and industrial, with our friend and CEO of Dolly Varden Silver, Shawn Khunkhun. Shawn, it's an honor to have you back on Metals and Miners. Welcome to the show.
Gary, good seeing you. Thanks for having me on.
Shawn, you're the CEO of a silver mining company. You've been in the mining space for decades. Where things right now are for silver as an asset class, it's a long time coming and it's making history. What do you hope for those tuning into this conversation right now that they're going to walk away with after listening to our discussion?
It's a really good question, Gary. I guess what I'm hoping to try to do is to be of service for those out there tuning in. Like, there's a lot of people in media that point out problems, but don't necessarily provide solutions. And, look, we may not have a solution here, but if we look at the 5,000-year track record of gold and silver have been money. And if you just look at recent history, if we took the last, 40 or 50 years, if one had saved in silver or gold versus in dollars, you would have restored and kept your purchasing power. So I think what I'm trying to do, I'm going to a family dinner tomorrow night where I'll have my mom, my sisters, my kids, and they're out there in this world where you've got rising housing and energy, and all these costs are going crazy, and they're seeing their wages stay constant, right? So they're getting squeezed, they're getting stressed, just like we all are, and they're looking at me going like, "What do we do?" And what I tell them is what I'm trying to do for my family, which is, get exposure to gold and silver, and it starts with metal. It starts with there isn't anybody out there that can't go out and buy 1 ounce of silver. We're paying for cell phone bills, we're paying for high priced coffee, we're paying for all these things we really, arguably never had the luxury of, in the past. But yet when it comes to money, I heard something really amazing on someone else's interview recently. I can't remember who said it, but they said, in China, the malls are filled with people that are going out and they're buying, and same thing in India, they're buying metal, they're buying silver. And here in America, we're going out and we're buying, and in Canada, we're buying things we don't need, right? We're taking our savings and we're buying things we don't need. And over there, they're rushing out, and the lineups are not at the clothing stores or at the electronic stores. They're at the gold and silver stores. And I think that's the biggest fundamental difference. And so what I hope to get out of this is, look, the gold and silver market in this industry has helped me maintain my lifestyle, right? And if I could do that for somebody else, I think that would be a great outcome.
And the visual you just gave about, the Chinese and the Indian populations going out and buying gold and silver and the American and Canadians not, is a really good point. The Americans specifically have a lot of U.S. bonds in their portfolio. and bonds have been in a 5-year bear market, while gold and silver have both effectively doubled, over the last year or so. So when you think about the balance sheets of individual citizens in China, in India, in the United States, and in Canada, we've effectively gotten poorer while they've effectively gotten richer. That's just a fact. Okay, so let's move here. The precious metals, they overran, they overheated, they were extremely stretched back into late October on a technical analysis basis, right? I'm sure you heard this. Many were calling that we hit a top, that, we're going to have a collapse. It's going to shoot right back down. We're going to have a long bear market, possibly 1, 2, 3 years. This was just a few short weeks ago. And, the metals, they've held the line. They've been so resilient in the face of that. You remember early November, late October, there was a 6 sigma event for gold dropping in one day. It was sharp, silver too. So here we now sit. Gold is, inches from its all-time high. Silver has gone above it by about 10%. How do you explain the behavior of gold and silver, this resilience, and what does it mean for moving forward?
Yeah, it's a good question. It's classic stage 2 bull market. I see bull markets moving sort of in 3 phases, where you have, the initial phase is the stealth phase, where you don't even know, it's like the boiling frog, where you don't even know the temperature's being turned up. It's a stealth market, and it's just quietly being accumulated, and it's quietly going higher. And when corrections happen, they're steep, they're deep, and they last a long time, and they're not bought, right? And so I would describe the period that we were in. And it depends how you want to look at this thing. It depends on, do you want to look at this thing as like a 50-year market, as a 10-year market? But let's keep things simple. Let's say the new bull market started in 2016, at $1,000 gold. Well, we've gone through some big periods where it was, 2-year corrections, 2-year sideways patterns, right? Where we had that initial move up 40%, and then it went and it lost, almost all the move. And so that was stage 1. What I think we're in right now is stage 2. And if you look back to the last time we were in a stage 2 market, it was the period from 2006 to 2010, right? And in that period, corrections got bought, the accumulation kept occurring, new participants rolled in. And so in stage 2 markets, those correction periods are short-lived, and they're immediately bought, and you're immediately dealing with higher and higher lows. And then just to define the last phase is the euphoria, the frenzy, stage 3, which is the shortest stage in a bull market, but it often gives the most percentage gains in the shortest periods of time. So I think the action that we're seeing is classic stage 2. And, I don't want to harp on this India-China theme, but, these economies and these countries have come from out of nowhere, and they're now, number 2 and number 5 most dominant economy globally, right? And when I ask myself why is gold up? Why is silver being bought? What's happening? Who are the buyers? It's retail, right? It's retail now. We're in a retail market. The stress on the Perth Mint, the stress on the local mints here, and it's those Indian buyers that are buying 4 to 5 times more metal, silver, than they were in the same period of time last year. And so if you look at the monthly statistics, what is now the 5th largest economy in the world is now cornering the silver market. And if you look back historically at the 5,000-year history, these are ancient societies that, in the case of China, they never had a gold standard, but they had a silver standard. And so these are your buyers. And so I think that's how I'd explain the price action. You're seeing, as we gravitate to the Eastern-centric markets of Shanghai, you're seeing that the Shanghai market set the price.
So if I could kind of summarize what I just heard, is that we have a more globalized metals market today than we have in previous bull markets. There's more buyers coming from China and India than ever before, plus the sovereigns are buying.
Yeah, and you know what's crazy for me is like when I study history, and I was born in 1981, okay? And the last, really great precious metals market was that 75 to 80 run in when you had silver go from literally pennies to $50 an ounce. I think the intraday high was $52, the closing price was 49, and gold soared over $800. And again, if we study that market, I believe gold doubled in price in a 6-week period of time from 400 to 800. So if you go back to, and the reason I referenced 1975 to 1980 is this is pre-globalization. This is pre the rise of China and Southeast Asia. And this is what a time that whole move was U.S. centric. It was the Hunt brothers. It was a U.S. centric. It was a run on the dollar. It was. It wasn't a market where you had, the BRICS countries. Whether it was Brazil, whether it's Russia, participating. We're seeing in Canada today, countries like Peru and Mexico come up to the mining sector and make very significant investments. So it is so global. And so what's really interesting, apart from all the other inputs like industrial demand, that global theme is something that's going to be different this time than it was in 1980, and even to a strong extent 2011, because you did have the rise of China, but you didn't have all these other powers in Southeast Asia.
So, and again, to your point, I want to move on to the next question, but I think this is such a critical point about this global growth. There's more than 60 million millionaires now that are going to be looking, that are already starting to look, but that will be looking over time to protect their wealth, to hedge their wealth. And, many of them are not going to be looking so favorably upon bonds as they did in the past. And so there's a lot of money that's going to be reallocated out of whatever instruments they're currently in and into the gold and silver space, looking for a way to protect that purchasing power. And these are just very, very small asset classes when it comes down to it.
I just spent 11 days on the road between the UK and throughout different parts of Switzerland. And the one takeaway that I had from my trip was there was a number of new funds that were setting up in a tax advantageous location, Zug, Switzerland, where energy funds were transitioning into silver, or crypto funds were transitioning into silver. So I think what I'm seeing at the institutional level, if you look and you go, okay, in 2024, there was like only $1 billion of brokered financings in the mining sector. And this is a number that's way down from like 6 billion in 2014. Okay. And 2014 was not a good year compared to 2010. But what my point here is, like, you saw capital, it was scarce and it left the mining space. And if you look at fine art and you look at real estate and you look at technology and you look at every other asset under the sun, you see record high prices. What I'm telling you now is we've had a year in metal markets on the financing side where I don't know the statistics yet because the year isn't over, but I would suspect we are getting back to those historic averages. We are way off the billion, 2 billion. We're probably up at that $5 to $7 billion number. And then the other thing that's crazy, Gary, is if you factor in inflation, often, I think about all this stuff and I'm seeing these market caps of companies, and I'm looking at them nominally, right? And I'm getting older now, and so I still think in $1980 and in $1990, and I can't, right? I've got to, my mind needs to move to purchasing power and relative value, not just the nominal prices.
That's a good point. Okay, so you were talking about the institutional allocation side, Shawn. Currently, institutional implied allocations are they're about 2%, and that is still less than 2016 and 2020. The highs in 2016 and 2020, the allocation highs, were higher even than they are today, despite the incredible year that we've just had, or we're still having. Of course, the 2008 to 2011 run, allocations shot up even higher than 8%. Today, they're just barely 2 or under 2%. Do you expect allocations in this cycle to at least mirror that large run-up in 08 to 11? And if so, what would that mean for metals prices?
So, the numbers that I'm familiar with is when I look at precious metal allocations relative to, a percentage in all other asset classes, I think I would suspect we're still less than half of 1%. And so in order to get to historical numbers of 2%, and if you look at where some of the Wall Street firms are now guiding, a 20% allocation to precious metals, but to answer your question, look, it's in a simple way, and nothing that I believe, understand, or know is unique. Like everything that I'm telling you is something that I've learned from somebody. And there's a great line. I want to say it was Rick Rule who says it. It's like pouring a bottle of whiskey into a shot glass. And that image that I have in my head of a little shot glass and a full bottle overflowing, that's what I experienced in the 2010-11 market. It's what I experienced in the 06 market when gold first went through 500 for the first time in, since that one moment that it did it in 1980, when gold went from 400 to 700 in the spring of 06. And I was just a kid. Watch it going from the bottom left on a stock chart to the top right. It was something I'll never forget, and it happened so quickly. Where stocks that I owned that were priced at 40 cents, within 6 weeks were trading at $2 a share. Stocks I owned at 7 cents were now at 40 cents. So essentially, I saw 5 to 7 times my money in a 6-week period with the gold breakout. And the one thing that's interesting right now is the stocks have yet to behave like that.
That's a great segue. So, Shawn, the miners typically deliver about 2.2, 2.3 times leverage to the metals move to the upside. We haven't seen that despite the great years that we've had in the metals and the miners. We haven't seen that leverage hit there yet. Why not? And do you expect the leverage to mean revert over time?
Yeah, it's interesting. Like if you went out and bought the SILJ, which is an ETF that holds a basket of junior silver miners, and had you bought that instrument in January of 2024, right, and had you sold it in October of or September of 2025, you would have made 3 times your money. But you could have had that same type of performance just owning the metal, right? So why take on the risk? And to me, this is a fact that points to the fact that we are still early in the cycle. So if you study historic cycles, typically what you have is you have the metal move, and the largest miners, those that are producing the most, move. There's a trickle down, and it takes time. A lot of gold investors were really frustrated. Gold went from 1,000 to 2,000 and the stocks didn't move. And, the Wall Street community or the Bay Street community, they waited until you had consecutive quarters of earnings and you had that cash flow come into the space before they bought the miners. Now that we've had a couple of years of performance and, big metal prices, the largest stocks on the planet, Agnico Eagle, is the last time I looked, it was a $120 billion business. And that was something that was started at $20 million. So the biggest miners, they're seeing it, but what we want to see next, in my opinion, is you want to see the mid-tier producers, the junior producers, the developers, the funded developers, the unfunded developers. And when you start to see the exploration companies, and within that exploration category, there's subcategories, we're going to get into a market where, Gary, if you've got claims, prospective claims, people are going to value those claims on a per acre or per hectare basis. Those are the signs that maybe we're at the end of a cycle, right? But we're not even at a point where mid-tier producers are getting the love. We've got a long way to go. And listen, I've got the luxury of talking to people like Eric Sprott or Frank Giustra, who have made billions of dollars speculating in the space. And what they're telling me is it's early and there's years ahead of us, years, whether it's 3 years, 5 years, 10 years, nobody knows, but they're out there. I think Eric put another $40 million into Highcroft. He owns 40% of it. He's doing that because he thinks it's early and there's a lot of room to run.
Right. All right. So that's all very encouraging. All right. So Shawn, recently the gold to silver ratio, it plummeted very quickly. A lot of people have been saying, silver is just an industrial metal now. It's no longer a monetary metal. The ratio is going to remain high from now on. I'm not a full believer in that narrative. I'm a believer that when push comes to shove, silver is still a monetary metal, and the people around the globe are going to revert back to that, in mass, especially as gold gets more and more expensive. But that being said, so the ratio plummeted very quickly from, we'll call it the mid 80s to the low to mid 70s. The move was explosive. It really shows how quickly silver can move. The mean is, we'll call it 55. Are you expecting the ratio to revert to mean or overshoot it? In what time frame?
And it's not because I'm Indian, but I keep referring to India. So the RBI, the Reserve Bank of India, is talking about bringing silver into their monetary system. So gold right now, it's collateralized, just like it is in the West, right? And, when we had Basel III come in the West, if you look back, Basel III was talked about in 2019, and it was brought in. And what it did was we went in our Western banking system. If I had an ounce of gold in the Western banking system, I'd only get 50% of the spot value of that ounce. Okay. But after Basel III, we got 100% of it. Okay. And so that to me is when the gold price, if you go back, it went through 1,300, which was it was a ceiling that it sat there for 6.5 years. And then it broke out and it went up 50%, and it's went up 100% from that high of 2000. So why I bring this up is in April, the Reserve Bank of India is going to bring silver into the banking system. And not only are they bringing silver into the banking system, they're going to peg it for 1 kilo of gold, 10 kilos of silver. So what that implies is not a 50-to-1 ratio, not a 25-to-1 ratio, but a 10-to-1 ratio. And so it's not going to go there right away, right? But if the biggest buyer of silver on the planet, right, that has the 5th largest economy, that's had a history, if you look at there's probably more gold per capita in India than anywhere else on the planet. You've got that 10-to-1 peg coming in India. Now, I just saw Keith Neumeyer when I was on the road, and Keith will tell you that for every 8 ounces of silver that are being mined, 1 ounce of gold is being mined. So 10 to 1 says India, 8 to 1 says the purest silver miner on the planet, First Majestic, 8 to 1. Historically, it's been 15 to 1, and naturally, it's 16 to 1. So, look, I don't know where the ratio goes. All I've experienced in my investing time was 30 to 1. I saw 30 to 1 back in April of 2011, right? And so, if it goes back to 30 to 1, that's a lot. It's cut in half from the current ratio.
Yeah.
And I just want to say one more thing, Gary.
Yeah, go ahead.
Not as a ratio, but if we look at it as a percentage, Michael Oliver from Momentum Structural Analysis does some wonderful work. And if you go back to that 2019 breakout in gold, he called it before it happened. And he's been somebody that I've been religiously following for a long time. And he talks about silver in percentage terms. And silver expressed as a percentage of gold today is about 1.3%. Historically, it's been 2%. Now, if you look at historic bull markets, it's been 6%. So, there is a strong case for silver making a 500% move, which for a lot of people would say, Shawn, you're a sensationalist. This is a big claim. This is not appropriate. But I've been banging my fist on the table since silver was $16, saying, look, I don't understand some of the valuations in these other sectors. And the one place, if I was only allowed to take one thing to the desert island, if I could only make one investment, it'd be silver. And I've been saying that consistently now, and we're starting to see outperformance. So it's really encouraging.
Well, you're slowly but surely being proved correct, and I think the question I'm about to ask you is a really good tie-in to what you just said there. So we're entering the 6th consecutive year where the world is in a structural silver deficit. So we're consuming far more than we produce. It's not a cyclical inventory adjustment. It's literally a fundamental mismatch between skyrocketing demand from everywhere you look and really a stagnant, inelastic supply for more than a decade now. In past silver cycles, the price would spike up high, and that would be followed by a crash as new supply came online, right? This time it's different. 70 to 80% of all silver produced is done so as a byproduct of mining things like lead, zinc, copper, and gold. Well, those mining operations, those activities in the early 2000s, China was going through this massive infrastructure boom. And so mining activities around the globe were ramping up like crazy to meet demand. And so silver as a byproduct was, coming online and gaining this benefit. We don't have that this time around. We don't have this massive infrastructure boom that's taking place at this time. And we have this disconnect where we don't have a ton of mines. So we have a very stable supply. It seems to me that the silver boom and bust cycle, it's broken this time around. And that what comes next is a sustained move higher. So the market is going to slowly awaken to the fact, this reality that it just simply does not have enough silver to meet the world's industrial and monetary needs. And not enough is going to be coming to the rescue anytime soon. What's your thoughts there?
That's a lot to unpack there, Gary. My first thought, and I don't want to sound like a crazy conspiracy guy, right? But the longer I'm around all this stuff, the more I'm starting to sound like one of those guys. And the first thought that I had when you were talking is I agree with everything you're saying. And there's only one sort of modification I would have. And the one modification, and this is just my experience, was in 2011, when the price started going, April of 2011, I remember the CME raising margin requirements. And the raising of those margin requirements, if I go back, and again, I'm going back here like 14 years, right? But it felt like every day there was like a 50 or 100% increase. And so if you're a silver speculator and you were made very comfortable where, oh, I can get more exposure to the metal, and I like the bull case here. And then all of a sudden, before you could even react, every 6 hours, in some cases, those requirements were being raised. And they were done so at all different times in the day, considering that these metals trade, 5 days a week, 23 and a half hours a day, right? And so, a guy who's a speculator in Australia can't react to the raising of the margin requirement. And so what I witnessed, Gary, wasn't that the price spiked and then supply came on. What I witnessed was the price was getting to represent the physical market. And in that digital market, there was a game that was played which forced people out of their positions. And it was painful. You saw people who were up, hundreds of percentage points lose everything in a matter of hours or days. And so when I first got into this business, and people would say, the silver bugs or the gold bugs and the tinfoil hat and the conspiracies, and that's what I believed. But now, after being here for 22 years and seeing the testimonies and watching the finds and seeing the market and seeing supply and seeing all this stuff, I'm tempted to lean with that crowd that questions whether it was supply that came on to cool the market or whether there was something more nefarious that occurred. And I've got some really good friends like Chris Marcus and others who, have been on this trail and on this case for what feels like a couple of decades now. And that's why, despite the fact that we really are only now seeing the breakout, we've all stuck with it because we fundamentally believe, like the Battle of Waterloo, that despite misinformation that may come out, the truth will set you free. And when it does come, in this case, real price discovery could take us a lot higher. We're starting to see it now every day.
That phrase, "the truth will set you free," we haven't really gotten truth in decades from the media, the governments, and whatnot. And so I am in the camp that I think truth is starting to reveal itself, and we are seeing it as evidence in gold and silver. But that's a whole nother discussion. We could spend an hour there. Shawn, let's move over to Dolly Varden in the interest of time here. Your company. Tell us about the assets in the Golden Triangle, what other established company projects may be bordering Dolly Varden, et cetera.
Yeah, so real simply, I'm not a scientist, nor am I a mining engineer, but I am the CEO of this little silver company. And what I set out to do, it's actually going to be 6 years now in February. What I set out to do was, when we were when silver was priced in the teens, $15, $16, there was zero incentive for a silver miner to explore or develop. And so, because I witnessed, and I've built mining companies in the past, like I built a gold mining company in the 2000s. I made more money speculating in silver in 4 months than I did building a gold miner in 7 years. But what I tried to do here was, I understood that miners mine, miners deplete inventory. And if they're not incentivized to replenish that inventory because the price is so low, what if I went out there through and brought in some smart scientists into an area that's well endowed? So I went up to a safe mining jurisdiction, and there's in the last 30 years, there's been 1.2 billion ounces of silver discovered up here in north of Vancouver. It's a 16-hour drive from Vancouver, hour and a half by plane. They call the area the Golden Triangle because there's been 150 million ounces of gold discovered in the last 30 years. But it's really the Silver Triangle. And it's been known for a long time. So there's these really famous mines like Premier, which was North America's most profitable gold mine when it was operating, produced 2 million ounces of gold and 45 million ounces of silver. There's the famous Eskay Creek mine, which is like a marvel. Like it is, Barrick was flying concentrate out of there and making money when gold was $200. That's how great the mine was, right? And so it produced 160 million ounces of silver at 2,200 grams per ton, 3 million ounces of gold at 49 grams per ton. But I was a skeptic. Like I grew up, I was born and raised in Vancouver, and I was skeptical. The area was kind of remote. The weather wasn't so great. Infrastructure kind of sucked. And there was a lot of uncertainty around communities. So I was a skeptic, and I mined in Manitoba and Ontario and Quebec and Nova Scotia and Yukon. And then what happened was there was a really smart, wonderful scientist named Bob Quartermain. And Quartermain built the Bruce Jack mine in 2017. And that, what he did was, you know, in addition to being super respectful to all the local communities and learning from them and including them in the participation of this deposit, he brought in power, he brought in roads, and he got the government to really support. And so what it established in 2017 was an industrial, modern, big 13 million ounce gold mine. And it's producing big ounces. And it was so big that a company called Newcrest bought it for $3 billion. And then Newmont went over the top and bought them. So Newmont's operating this big mine. And so, look, I can't compete with Newmont. So what I did is I went into the area and I picked up as many old mines as I could. I got 5, and I picked up a bunch of ground. And I've raised a lot of money, like $185 million with some really smart people like Hecla and Eric Sprott.
Are you bordering? Is Dolly Varden bordering that mine?
So the closest, okay, so we've got mines, right? We've got 5 past producing mines, and we're in and around Newmont and Premier and SK. And so we've got so much ground now that we're not bordering them. But, you know, for example, the Red Mountain deposit is about, in kilometer terms, 20 kilometers from our Homestake deposit. But we've got mines like Porter that are even closer, right? The key, Gary, is we've identified a big resource. You know, we've got about 150 million silver equivalent ounces. And I say silver equivalent, and I'm referring to the 64 million ounces of silver and the million ounces of gold. Where I'm hoping to go is we're putting out a new estimate in Q1, and I'm hoping to deliver 100 million ounces of silver plus the million ounces of gold, which works out to about a 200 million ounce equivalent. And there's a high degree of confidence. It's not so much the size of the deposit, it's the grade, it's the proximity to infrastructure, it's the fact that some of these deposits were producers and very famous ones. Like one of them was Canada's 3rd largest primary silver mine. The other one was the richest in the British Empire. So we've got famous mines, we've made new discoveries. And so Dolly Varden now has positioned itself as the top 13 silver equity investors can invest in. So you have your 10 producers, you have a couple other, 2 other big developer exploration ones. So Dolly Varden is a top 13 silver equity.
So, okay, so that's a good spot here. I mean, to invest in a mining equity, investors want to know that they're investing in a company that the management team is also all in on, that they're investing in. It really gives them confidence. Has the Dolly Varden management team been buyers of the stock in 25, and are they planning to in 26?
So we got behind this name when we launched it, right? So I personally have, millions of dollars of exposure to this company. So we're aligned with shareholders, we're incentivized, and if you look at our shareholders, 52% are institutions. You've got Hecla and another corporate at 25. Eric Sprott owns 9%. Management consultants own about 4%. But when you're dealing with a company that's valued at $600 million, 4% is material.
Yeah. All right. So where are the pitfalls, Shawn, to Dolly Varden's broader strategy of development here where things could possibly go wrong?
So the challenge that I have is it's a capital intensive industry. So the challenge is we are getting rewarded for growing inventory, right? But if we want to move this inventory and turn it into silver, like a produced product, getting it out of the ground, the challenge is how do we do that in a non-dilutive way? Now, the good news is as the prices have risen, so have the share prices. And so we're able to bring in more money to develop the project, and it's less and less and less dilutive. For example, we raised about $63 million this year, and we did it at record high prices, which was very minimal dilution to our shareholders. And now what we're seeing with some of our peers and neighbors is, what used to be credit card interest rates to fund mining projects are now coming down from 18, 19% to 5%. So it's quite palatable now to float out a convertible debenture and to build your project. So, that's all a function of price, and it's a function of investor interest. And so I'd say our biggest challenge, Gary, is elegantly moving the project forward in a way that minimizes dilution to the shareholders.
Well said. Okay, so I understand that you have some breaking news that you want to share with everybody. We might be the first, I don't know, to hear about this. But yeah, would you please share your breaking news?
Yeah, listen, I'm really proud of the work the team has done to grow Dolly Varden. We started at a small valuation, and through discoveries and through acquisitions and through financings, the company's grown. And, to touch on that point about dilution, the merger that we announced this morning, and you are the first to break it, the merger that we announced this morning, we are merging with a producing company. And the rationale behind that, number one, is it's a non-dilutive way for us to build our project. The combined company is going to have $200 million in cash and $200 million a year from cash flow. And so the idea here is we are marrying up with a management team that, Rick Van Nieuwenhuis was the CEO and founder of Nova Gold, which is a $6 billion company. He was former CEO of Trilogy, which he permitted the Ambler Road. The U.S. government just came in. Rick has built a dominant Alaska-focused producer, developer, and explorer. Simultaneously, I've been building a dominant explorer in the Golden Triangle. So there are regional synergies from Alaska to Northwest British Columbia. Both companies are high grade. I think one of the biggest things we're getting in this transaction, in addition to the cash flow that's coming from the Manh-Choh operation that Rick's got in partnership with Kinross, I think the biggest thing we're getting outside of the endowment, the pipeline, the production, this is about the people. Rick and his team have proven over the decades an ability to drive value to shareholders through discovery, through development, and most importantly for Dolly, we've got wonderful explorationists and scientists, but as the project now moves through development, we can leverage his operational prowess and know-how to develop our projects. Simultaneously, our creative and successful explorationists will then go to Alaska, and they'll go to Johnson Tract, and they'll go to Lucky Shot, and they'll go to Manh-Choh, and they'll try to expand, extend, and discover, just like they've done at Dolly Varden. So I am really excited about this transaction. I'm excited to be staying on as the president and director I think, I'm honored to be able to serve Rick as CEO and work with him. And I think we're going to be a great team. He's a scientist. He's got wonderful experience. He's got a great track record. And I'm very, very happy to get out there on the road and share the value proposition and bring my creative team of explorationists and scientists to grow his deposits like we've done at Dolly Varden. So I do think this is a 1+1 that could equal 11. And I do think that this is just the beginning. So we've got support from major shareholders on both sides. And I'm so happy. I'm so happy to be announcing this. And I'm really excited about the next deals to come.
Well, first of all, I want to say congratulations. How wonderful. You've worked so hard, put in a lot of time. Is the company going to get folded in under this other company, or will a new company be formed as an umbrella? How will that work?
So it's a merger of equals. However, Catango is the top co, and there's a number of reasons from tax, but most importantly, what I'm trying to build here is a company that can go to the S&P 500. And in order to do that, Dolly's a Canadian company. We need to be a U.S. co. And so for tax and for where the company's domiciled, they are technically the acquiring co, and they are going to be the surviving co, and we will be known as Catango Silver and Gold. And we're going to be looking to continue to build in a tradition of high-grade precious metals in the north. And, we've got the balance sheet, the cash flow. You're going to see combined about $9 million US of liquidity. It's index inclusion. Catango is already in the GDXJ. Dolly is already in the SILJ. So you've got, from a liquidity standpoint, from size and scale standpoint, Gary, we're in an environment right now where, 58% of money is passive investing. So being indexed, being in the ETFs, it's everything. We'll be a $1.2 billion company. We'll have $200 million in the bank. We're going to have $200 million in future cash flow. We've got a pipeline of projects. And whether you want to look at this through a gold lens, 3 million ounce gold equivalent, or a silver lens, 250 million ounce silver equivalent, it's a precious metals, high grade, good management, well owned, wonderful shareholders. And as you could hear in my tone, I'm quite excited and proud that we're presenting this to shareholders.
That is so wonderful. Well, congratulations again. So thank you for sharing that here and with us and with our cohort that's listening. I'm sure they're really excited now that they've gotten that information. All right. So this has been an incredible discussion. I just want to welcome all who's tuning in to this conversation I'm having with Shawn Khunkhun, the CEO of Dolly Varden Silver. Before we wrap up here, and I ask Shawn the final question, I just want to direct everyone who's interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join the quickly growing community. You're going to receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio. And that's also the name of the report that you'll receive. Now, I'm positive you've been enjoying our discussion we've been having. Please let Shawn know. Hit the like and subscribe button and leave a comment below the video. All right, Shawn, as we wrap up here, would you share a key takeaway that you want the viewers to keep in mind? It could be about silver, Dolly, the economy, the market or monetary situation that we find ourselves in, and then let everybody know where they can learn more about your work and how they can connect with you.
Okay. Just from a local, from a practical level, I'll just give you one sort of number, one factoid, which is 5 years ago, I live in Vancouver, and we've got a pretty expensive real estate market here relative to other places. 5 years ago, you would need about 65,000 ounces of silver to buy a home here. Today, that number is 15,000. From 64,000 ounces to 15. So in one way to look at that is you could buy 4 homes for the price of one had you put yourself in silver. And I think that from a historical standpoint, whether you look at silver to gold, the gold, the Dow, you're not too late on silver. The price is at an all-time high, right? But it's only 18% higher than where it was in 1980. And, how many other things are only 18% higher than they were in 1980? And so I just want you to think about things not nominally, but relatively.
And inflation adjusted, by the way, I think that number is about 196.
That sounds about right.
Sorry to interrupt. Go ahead. Finish.
No, all good. So yeah, listen, if you want to learn more, you want to get in touch with us, dollyvardensilver.com. We're active on platforms like X and all the social media. There's phone numbers and all that on the website. We've got a team of people. And if you don't want to talk to one of us, we've even got an investor relations chatbot that you can ask questions day or night, and it'll give you some answers.
Wonderful. I'll have all the information up on the screen. Everybody can view it. I'll put it in the description area. Everybody can click through, get over to you on X or your website, etc. Shawn, thanks for coming on to Metals and Miners. It's always so wonderful to spend the time with you. You were so generous with your time, analysis, and ideas, and I really appreciate it. I look forward to having you back on sometime soon. Everybody else, thanks for watching. To direct everyone who's interested in the metals and mining sector to dive into our Substack at metalsandminers.substack.com. Join the quickly growing community. You're going to receive a free report. It's titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio. And that's also the name of the report that you'll receive.